Question 24. Purchasing supplies on account affecting on two accounts name and journal entries will increase both assets and account payable. You purchase supplies on account, so affect two sides, assets and account payable increase both.
I want to say no again.
Because why?
Because it's journal entries.
But if the account equation or the balance sheet, right. That's why trick here. This is the trick.
Dumb
This
question.
one. What?
What if we make assets the word supplies? Couldn't it work for journal entries then?
Sorry.
If we make in this
Assets
question,
is journal entrance.
if we make the word assets supplies and it said affecting two accounts, supplies and account payable, wouldn't that work in a journal entry?
No.
Still not?
Supposed to be supplies and account payable.
Yeah, that's what I just said.
But you didn't write assets.
Yeah, if you write supplies instead of assets.
Yeah. If you write just account name,
Okay.
supplies, and account name, account payable, that's correct. But if you write assets and supplies, that's not correct because you can't write assets and supplies. You have to write the account name because assets or liabilities or owner equity just on the balance sheet, not the journal entries. This is the correct answer. Okay? Would you like to move on? Okay. Mr. Abraham Marcus is starting his computer programming business and has deposited an initial investment of $15,000 into the business cash account. Identify how the accounting equation will be affected. Who can answer? Mr. Abraham Marcos?
Is B.
That's what I want to say.
B. Increase assets as a cash and increase owner equity as a capital. Perfect. Number P. Right. See it, study hard. Mrs. Sofia Mikhail paid the first batch of 4 batches installment on supplies were purchased in the amount of $10,000. How will this transaction affect on the accounting equation? C. Why C?
Because she's still not done paying all of the batches, but she will spend some of her money paying off the batch, and she also decreases some of her liabilities because she doesn't have as much to pay off.
That's not right.
Oh. It's not C?
What's the problem tell us? What's the main problem here? Or what's the main question? Mrs. Sophia paid the first purchase $10,000. At the same time, she get what? In her business? Supplies. So here, assets are going up, and at the same time, liabilities going up or going down.
Going down.
That's
So-
confusing.
Why confused?
Because to me, this problem looks like she got them on account already.
Okay, but she paid one of them, but she have to record what in her book. She have to record supplies that she obtained it, and she have also to record what?
The first thing I would do, to me, I read this as she already bought them and she's just paying them off instead of she's buying them.
No. The problem tell us she paid first batch on supplies were purchased purchases on account $10,000. That means supply is coming in her business and she paid the first batch. So two connection here. Assets and liabilities. Increase assets supplies, decrease liabilities as account payable. Number D, sorry. Decrease assets and cash because she paid, and decrease liabilities as account payable.
That's what I said.
Yes.
That's fine.
Indicate how the following transaction affect the accounting equation.
So the purchase of supplies on account, that means that your liabilities are going to go up. Your accounts payable is gonna go up because you have to pay, and wouldn't supplies go up because you're getting supplies?
Here's the answer. The purchase of supplies on account, assets increase, liabilities increase too.
Can I take a photo of this one?
Sure.
Again, it's a lot of words.
Try to focus on here. Okay? So, the purchase of supplies on account, that means supplies coming in your business, and at the same time, you pay this supply or take this supply on account, you have to pay, that's meaning your liabilities increasing too.
What does sell made on account mean? D, does that mean?
Sell made on account, you sell goods on account, you didn't receive the money on the spot, or you didn't receive the money on the time from the customer. That's why you record the account receivable and sell revenue or owner revenue. See, account receivable as assets, sell revenue as an owner revenue. So withdraw by the owner to pay personal expenses. That's mean here assets decrease and owner equity decrease to buy withdraw. Assets decrease as a cash and the owner equity decrease as a withdraw. Number 3, revenues. Received in cash. That's mean you sell something or provide service and receive the cash immediately or on a spot. That's mean assets increase by cash and the owner equity increase by revenue. Okay? Earning revenue, increase assets and increase owner equity, or increase assets and decrease owner equity, or increase one asset and decrease another assets, or decrease assets and increase liabilities. Earning revenue. What's the effect earning revenue?
It would.
Number 1.
It would be A.
I think you're right.
Yeah.
Yes, increase assets as a cash and increase owner equity as revenue. The statement of cash flows consists of 3 sections. Cash flows from operating activities, cash flows from income activities, cash flow from equity activities. True or false?
False.
False. Right. Who can tell me?
One is finance activities. One is
Operating activities, the first section.
One's withdrawal.
No investment activities, that's second section. Third section, financing activities. So cash flow consists from 3 sections. Operating activities, section 1. Second one, investment activities. Third one, financing activities. Okay? It's false. Who can read?
Equipment with an estimated market value of $30,000 is offered for sale at $45,000. The equipment is acquired for $15,000 in cash and a note payable of $20,000 due in 30 days. The amount used in the buyer's accounting records to record this acquisition is A, $30,000, B, $35,000, C, $15,000, or D, $45,000.
Who can answer?
want to say B. When you get down to it, it's what you're actually paying.
Yes, because she 15,000 plus 20,000 give us
Oh,
35,000.
I don't see the 20,000. Okay.
Okay? Section 2, pay attention, accounting equation. So section 2 accounting equation, I will give you something like this in the exam or as a table in the accounting equation. The difficult thing in the exam, this section. Okay? I will make this section the difficult thing to see who can get A or B or C. Okay? So, Mr. Isaac Abraham is the owner of Isaac Financial Service at the end of its accounting period, December 31 of year 1. Isaac has assets $575,000 and the owner equity $335,000. So he has assets and owner equity. So what's the question we have? Using the accounting equation to determine the following amount. Isaac's liabilities as of December 31 of year 1. So we need liabilities December year 1. And second requirement, Isaac's liabilities as of December 31 of year 2. We need also year 2. Assuming, pay attention, that the assets increased by $56,000 and the owner equity decreased by $32,000. So we will move first to figure out the liabilities in December 31 for the year 1. It's easy, very easy, it's just math, or to follow the account equation, because we have here assets $575,000 and the owner equity $335,000, but we just miss liabilities. So liabilities on the account equation tell us liabilities equal assets minus owner equity. So we have here assets $575,000 minus owner equity $335,000 give us liabilities. How much?
So I want to say 240,000.
240,000. Perfect. So liabilities here $240,000. This is the first requirement. In December 31, year 1. Okay? We get liabilities in year 1. So we will move on to get liabilities in year 2. But we will use this assuming this data. We will use assets increase as increasing by $56,000 and we will decrease the owner equity by $32,000. See, first one. So second one. So we have, before to answer this question, you have to determine how much the assets after increasing by $56,000 and how much the number or amount of the owner equity after decreasing by $32,000. I guess now it's answered, right? So we have just made math. So here liabilities equal assets minus owner equity 2 for year 2. we need to figure out year 2, liabilities. So assets here, we have to count assets because increasing by 56,000. So we have the first amount for the assets original, $575,000 plus $56,000 give us the number of the assets. And then we will move on to count owner equity. Owner equity first, $335,000 minus 32 because decreased by $32,000 minus $32,000. Here liabilities still we don't. So we have count here. Give us the number for assets $375 and the owner equity how much, or 60,000 $31,100 and here $300. So this minus this, assets minus owner equity give us liabilities. How much liabilities we can?
$328,000.
Perfect. $328,000. This liabilities. See, easy. Just math and follow the account equation. Because here we miss liabilities in year 2, but he gave us assuming as assets increase by $56,000 and the same time owner equity decreased by $32,000. So I have to count the original assets amount and the first in my problem added to the $56,000 and the same time is because I know here the owner equity decrease, that's mean going down by $32,000. So I have subtract $335,000 subtracting from $32,000. So once I get the net number for assets and the net number of the owner equity and the counting following the accounting equation, subtracting give us the liabilities during year 2. Easy, right? Move on.
Yep.
The same section, number B, problem MJ Spa. Marian Jacob is the owner and operator of MJ Spa. At the end of this accounting period, December 31, 2019, MJ Spa has assets $450,000. So her assets or MJ Spa $450,000 and liabilities of $125,000. So we will miss here. We have assets and liabilities, but we miss what? Owner equity. So we have to figure out owner equity in current year and the owner equity too in the next end of the next year. It's easy. Number one, very easy. So using the accounting equation to determine the following amounts. Owner's equity as of December 31, 2019 of the current year during this year. So how I will figure out this? It's easy. Follow the account equation. Let's see. So we have here assets, give us assets number, assets equal $450,000, and the same time liabilities give us $125,000. We miss owner equity here, missing. So when we wanted to try to count or figure out owner equity, we will follow the account equation. Owner equity equal assets minus liabilities. So owner equity here missing, assets $450,000 minus the number of the liabilities $125,000. Who can count?
$325,000.
300 what?
20, oh, sorry. No, it's 25, never mind.
Sorry?
It's 325.
325?
Yes.
$325,000. So liabilities here, $325,000. We minus subtract assets, subtract from the liabilities, give us the owner equity. So the owner equity for the year one, owner equity for the year one, $325,000, year one, or current year. So number two, owner's equity as of December 31 at the end of the next year, assuming assets increase by $65,000 and liabilities increase to by $35,000 during the year. Here we have two accounts increasing. Assets increase by $50,000, $65,000, and at the same time liabilities increase by $35,000. So we have here number assets will increase, that means we will add here $65,000, and at the same time liabilities increase too, we will add $35,000 in the liabilities to can get the owner equity. So let's count here assets $450,000 plus 65 dollar equal, and liabilities. How much liabilities we have? $125 plus $35,000. So how much assets here?
Looks like 515,000.
500 what?
15.
$15,000. So we get assets here. So here owner equity, assets minus liabilities, assets $515,000 minus liabilities. How much the liabilities here?
160,000.
160,000. So minus 160,000 equal how much? Equal owner equity?
355,000.
$325,000.
Oops.
$325,000.
Wait a minute.
Wait, what?
That ain't right. Oh, this is the current year. We're good. We're good. Yeah, this is right. There we go.
300 what?
That's 55,000.
$55,000.
So, dumb question. So you know that basically, the assets are increasing by 65, the liabilities are increasing by 35. Couldn't you subtract the 35 for both of them and realize that the assets are just basically increasing by 30,000 and then add 30,000 to your owner's equity?
And what?
Add
what?
30,000 to your owner's equity and expedite the process?
Why add 30,000?
because that's the difference between, the assets and the increase in
But
liabilities.
no, here tell us increasing, that's mean increasing the during this year. So increasing here, I have to count the original assets and add what's the amount
Yeah,
increasing.
it still works though.
So it's what?
It still works.
What you say?
Okay.
Can you tell us here? And then-
So the quick way of me doing this is